Hey guys, and welcome back to a weekly recap of the best trading setups on the SP 500 E-mini futures contract, ES1 in short. And we're gonna take a look at the entire week. We're gonna start off with Monday. I've already prepared the charts. Those are not my own executions. Those are just example executions of what, in my opinion, were the best trading setups this entire trading week. So let's get started right away with the price action on Monday, the 22nd of April. Me at that time, I was still over on my Greece vacation. I've visited Rhodes, very beautiful place, but let's get into it. Right here, I'm only trading the London time zone window, so I usually get started with all my members on the Discord server right here at 3 a.m. We usually say good morning and everything at 2:30 a.m. or 2 a.m. Some traders even start to trade right here at 2 a.m. I cut out this 1 hour timing window from 2 until 3, where I avoided taking trades because I found that, the majority of the setups happen post 3 a.m. after the actual market open, so that just felt better. So let's get rid of those two lines. And then right here at 3 a.m., London opened up. We barely had any impact. And we're going to do this candle by candle. We can already see the overall setup here. If I were to ask you the question, which setup that would be? Well, correct, the 2022 mentorship setup. What happened here? Let me use the drawing tool to explain it. So within the 2 to 3 a.m. timing window, we formed a high right here, a higher low right here, and we pushed and formed a new higher high. So right here, this is our 2 a.m. hourly candle high. 3 a.m. opened up. At 3:05, we had one last sweep of the highs, and look at this nice wick up here. Body's closing all the way down here with almost no wick to the downside. And the very next candle immediately is pushing through this bullish fair value gap. What does it tell us? Well, it tells us essentially that bullish order flow at this point in time is not being respected. Alright, that must mean we are in bearish order flow. Let's see if we can gather some more confluences on the setup. So first of all, we broke a bullish fair value gap at 3:10. At 3:15, look what happened here. We actually managed, let me zoom in here so we have it on the full screen. We managed to close below our lowest swing point right here. This is our market structure shift level, confirmed with the close below. And at 3:15, new 15-minute candle opening, the close of the first 15-minute candle after the London Open, what happened? We left behind a new 5-minute bearish fair value gap here, overlapping with the lowest down closing candle of this price leg, the breaker block exactly, and this inversion fair value gap. So we have lots of confluence that essentially tells us, all right, if we go higher, so be it. We just took a loss, but the probability on this one, given the breaker block, the market structure shift, the bearish fair value gap, and the inversion fair value gap was pretty high. We had our midnight opening level all the way down here. So we're way above that. We're also far away from the VWAP. We already cleared the Asia session high. We retraced into one of those higher time frame fair value gaps right here, but we don't care about that. We just take a look at the 5-minute order flow and use that to interpret price and take action based on it. So right here on that bearish fair value gap, I would have taken let me get rid of these drawings. I actually did take my entry during the London kill zone back over in Greece. Retest, very nice close, and we can do this candle by candle now. What happened here is we retrace into the breaker block and the bearish fair value gap. I'm not looking for my entry at the highest point. I like to take low-hanging fruit entries just to make sure I actually get filled. We close back below the breaker block. Next candle opens up, we retest the breaker block and we reject. We open up with a gap right here because this candle at 3:25, closing of the second 15-minute candle of the 3 a.m. timing or 3 a.m. hourly candle. We open up right here. Let me point that out with a little box. We open up with a gap because we close here. We open at a different price level and we continue to push lower. Let's actually use the volume imbalance template for that. We close below. The next candle opens up, and what does it retest? 5-minute time frame volume imbalance. Maybe something's there on 1 or 30-second time frame. We don't care about that, but we use this as confirmation. Okay, we recheck from here, and what do we revisit? The VWAP. And what also lines up here perfectly with the VWAP? Sell side liquidity. So we just hit sell side liquidity, those two short-term lows with a higher low to the left and a higher low to the right, and this lonely low right over here, swing low. Higher high, higher low, higher high, higher low. But this is more, well, within the overall trend. This one stands out because it's actually a retracement after this initial expansion, retracement, reversal. I always like to take my partials, and partials at the VWAP never hurt. And then like we've seen, we also hit our lonely low right here at this point in time here at 3:40. So we're still within the 3 a.m. hourly timing window. Leave behind this bearish fair value gap. What happens next? We fill it in, we reject. As long as we don't close above it, especially on ES, this works really well. We're good to go. We close right at the low of this 5-minute bearish fair value gap, recheck from it with a nice bearish closing candle with, once again, almost no wick to the downside, which tells us there's not much buying pressure right here. So we close below the VWAP, next candle at 3:55, so almost the end of this hourly candle, which so far, if we think about the hourly time frame from a multi-time frame perspective, we had our previous hourly close or hourly wick high right here, hourly close right here, 2 a.m. opened up right here, and the low was right here. So this is our 2 a.m. hourly candle. We swept the high, and we retraced all the way, even below the 1 a.m. So from 1 until 2 a.m., this is our 2 until 3, 3 until 4, if that all makes sense. We even swept this 1 a.m. low, because the 1 to 2 a.m. hourly candle opened up right here, formed its wick low right here, and closed right up here with its wick right here. Of course, if you use the ICT all-in-one, you can see that all on the same chart, but let's not get into that. Just make sure to join me on my daily live streams on the Discord server. I do 3 live streams every Tuesday. What happens next? We take out all the sell side. A new hourly candle is about to open up. I'm always careful around those times. What happens? 3:55. We close right here. So this is our hourly candle close. This is our 3 to 4 a.m. hourly low. We open up once again with a gap right here with the new hourly candle. So on the hourly time frame, we actually see a bearish volume imbalance. We continue lower, followed by another volume imbalance, but this time only on the 5-minute time frame. All right, now it's 4:05. What happens next? We obviously would be waiting for sell side to be hit. We take some more profits because at this time, if you just use one mini contract, that move to the VWAP is already a 6-point move. Essentially means you've already made $300, 350. 5 points is always $250 on the SP500 E-mini futures contract. And by this time, we've already hit 9.25. Well, I don't know. Of course, I likely also would have tried to hold on to this trade all the way to the Asia sell side liquidity target, or at least into those perfect equal lows right here. But we never got to it, and let's see what we can actually use as invalidation for this entire short. We continue lower, but what happens right here? It's 410. 410, the close of the 410 candle means a new 15-minute candle is about to open up at 4:15. We have our bearish fair value gap here, and notice that's the only bearish fair value gap ever since the fair value gap here at 310. 410. We close back above the VWAP. We close back above the short-term high with a lower high to the left and a lower high to the right. We open up with a bullish volume imbalance, immediately closed in. We come back to retest this candle's high, wick high, push back above the VWAP, so likely something happened here on the 1 minute time frame if we were to zoom in. We actually can do this in this example. So let's take a look at the 1 minute time frame here to see what happened. You see that? Let me actually get rid of all these drawings. Might make it a little bit easier. This is our 5 minute bearish fair value gap. We can see we filled it in nicely. We actually had a nice unfilled volume imbalance here as well on the 1 minute time frame. But the most important point here for me is that we formed lower lows, lower highs, lower lows, lower high, lower low. And right here we shifted market structure to the upside, came back to fill in the highest bullish fair value gap. That's essentially what we've been looking for right here. If we go back to the 5 minute time frame now. So right here we have that 1 minute time frame bullish fair value gap. I don't even have to go down to the 1 minute time frame. I only go down there if I'm forced to go down there. You will know why if you watch me live streaming. But the main point I'm trying to make here is we've rejected off the VWAP. We pushed higher, but we're getting some rejection. We still didn't manage to close or to turn this bearish fair value gap into an inversion fair value gap. We actually always manage to close at the 50% or below it. All right, what's happening next? Let's check out what the next candle will tell us. All right, the next candle retests this down closing candle and this down closing candle, our market structure shift level. And it's, what's most important, closing above the inversion fair value gap. So if you, or bearish fair value gap. So if you still have a contract running at this point in time, this would be the time when you should close it. Because what we see next, this is our early sign of bullish order flow when it stops respecting bearish fair value gaps. Same here, stops respecting a bullish fair value gap, we close below it. And we continue lower from here. Then we also had the market structure shift confirmation. We already had that confirmation essentially here. But, well, this is all a little bit tangled up, a little bit tight. So I would like to use lower low, lower high, lower low. We can use it, but I prefer this one. We managed to close above it. We have our inversion fair value gap now. We have the VWAP below us to support price. Of course, at this point in time, why do you even care? Continue trading. You already mastered it. I usually do it 2 hours per session. So from 3 until 4 a.m. and from 4 until 5 a.m. And if I already hit a nice winning trade between 3 and 4 a.m., I don't even care to look at the 4 to 5 a.m. timing window. Why would I? Doesn't make sense. Back your winner and leave the charts, come back for the New York session. So we also won't continue, just because I want to show you how nicely we use the inversion fair value gap afterwards. We had one stop hunt right here, essentially, like we already talked about. Nice little stop hunt, filling in that lowest bullish fair value gap on a 1 minute time frame. Inversion of this bearish fair value gap, we close above, we come back to retest it, also referencing our 5 minute inversion fair value gap with a nice pin bar, before we took off with the new hourly opening right here at 5 a.m., pushing through all of that stuff, forming new highs. Let's actually continue with the New York session now, because I'm only looking at the prime setups. This really here isn't a textbook setup, so I didn't include it in this overall weekly recap. So after a successful London session on Monday, 22nd of April, we can already be done for the day. If you don't like to take more than 1 trade per day. But what's very important for me at least is to take a break afterwards and come back with a fresh mindset for the New York Open, because I'm a opening trader essentially. 9:30, 3 a.m. That's the way to go. So what happened on this day during the New York Open? New York opened up right here. Prior to that, we essentially consolidated. You could call it seek and destroy, because all we really did was take out short-term lows, take out highs, and after we took out those highs, we take out the lows, and look at it, every time we come back to the VWAP, we eventually bounce off it. This is not a magic defensive wall. We can close below it. It's an area to look at for overall support and resistance based on the volume weighted average price. But let's not get too deep into that, otherwise that video is going to take forever. So right here, 9:30, prior to 9:30, 9 a.m., 9:10, 9:15, 9:20, 9:25, we already get the first indication of us continuing lower. But also keep in mind we had a bullish fair value gap here and nice buy side to target. Anyway, what happened at 9:30 is we dumped back to the VWAP. Afterwards, continued or followed essentially by 2 candles trying to push lower. We already had a push lower into the short-term low, but we really didn't make it anywhere further. Look at this rejection wick. This tells you a lot. This would really scare me off from taking a short here. And even if we would have been here on the stream and placed our sell limit order right here with our stop loss above this high, with high probability I wouldn't have taken that because we already hit a major low right here. Of course we have more sell side to target, but the wick tells me that doesn't feel right. Keep in mind, we didn't see such a wick over here. Not in that dimension at least. So even if you would have taken that short here, yes, that would have accounted to 1 loss. But if we're being honest, this is not a proper 2022 setup. We never really cleared buy side liquidity before we moved to the downside. But now we cleared sell side, or at least a short-term low. So why would we continue any lower than this if we're already rejecting heavily? We're back at the VWAP. Of course, we can always continue lower. We can also take a look at the 1-minute time frame here and see where that takes us. Looking at the 1-minute time frame here at this opening. So 9:30, we get our drop, get our pump away from the VWAP, we dump, continue low, and then on the 1-minute time frame you already see all you have to know. We take out the short-term low, but how do we do it? That's the question. We consolidate. We take out the low, and we aggressively move back away from it. We get a following pin bar candle with a wick to the downside and no wick to the upside. Left behind with a bullish fair value gap. We reference that. And what happens after we test it? We continue to push. And where do we push? Back above our 5-minute inversion fair value gap. All right, so now it's getting interesting. We cleared sell side liquidity. I'm always not too, I'm a little bit more hesitant, especially with the New York Open, to not get faked out because it happens a lot at the New York Open, so I prefer to wait a little bit. We close above, nice candle here, wicks to the downside, bodies closing up high. We have nice buy side to target here. So what I would have done is simply play the inversion fair value gap setup. So right here we have a inversion fair value gap, a bearish fair value gap, we close above it, paired overlapping with a bullish fair value gap right here. We just took sell side liquidity. We have the high of the day sitting right here at 50.36, which is a very nice target. So we execute longs right here. We retrace into it, test the 50% level, and nice, we continue up higher. Do we continue up higher afterwards? No, we got rejected. We have a nice rejection wick here. Not very nice if we're in that specific trade, but it is what it is. We keep on holding with our stop just below the slow or at the 50% level of this stop hunt wick right here. We got rejected. We tested the 50% level again, and note how we managed to hold above that inversion fair value gap and bullish fair value gap 50% level here. Even here we got really close to it, but on this candle we actually broke it. We even pushed below our bullish fair value gap, so this would have already, very likely, we're all human beings, scared shit out of you. But this close gave us all the confirmation we needed. 10.15, close below the 50% level of our inversion fair value gap and our bullish fair value gap. What happens next? Are we surprised? Very big bearish candle, taking out this old low. So what happens afterwards? We came all the way back to test the midnight level right here at 1550.5. This is our midnight level, drawn by the ICT all-in-one indicator. We leave behind a new bearish fair value gap. And what potential sell side do we have below? Because we already cleared our London session low. But now it really gets interesting because we still have our Asia sell side liquidity that we could potentially target. So the only way how we could lose on this if we just keep on chopping around. But I think the trend with high, lower low, lower high, lower low, lower high, lower low is bearish. It's hard to deny. We retested the VWAP. We would have entered right here at the low of this fair value gap, targeting sell side liquidity. If we would have seen a close above, we could have closed our position early, which never happened. We had a nice rejection on that very same candle. So even if you don't like to, let's say, we're right here. You want to see what happens before with this bearish fair value gap, because so far during this New York session, fair value gaps haven't really been respected. So let's take a look at what happens inside this fair value gap. If you're a little bit more careful now, if you maybe already took a loss on this one, like I would have certainly, we touch it. But that's not good enough. We really want to see this being filled in. So we wait. We get our VWAP retest and a nice rejection of the VWAP. We filled in the entire fair value gap. We close at the very low. So we take the short from right here, because now we really have that confirmation. Okay, fair value gap is filled in. We've been rejected. The chances of us continuing lower now are higher. And we already have some sort of confirmation other than just placing a sell limit order inside of this fair value gap here blindly. Nice, we get a bearish candle afterwards. Let's continue. We formed a new low. Our take profit target sits just right here at Asia sell side. We leave behind a new bearish fair value gap. We didn't tap it yet, so we could actually add another position right here. You get the idea. But didn't even test it. So we hit our target. That's all done. Let's see how we continue. We hit our sell side target. Not looking for much more. It's also 11:15 now, so this is also a new hourly opening. I'm always careful around these new hourly openings. Usually they like to fake you out at the beginning of the new hourly candle and turn it in the opposite way. So right here we managed to close back above the midnight level. We haven't tested this bearish fair value gap. It's already colored as a inversion fair value gap because of what happens next. We close above the midnight level, hold the midnight level, and then we push. Very strong close back inside of this old bearish fair value gap, but I'm not very interested in that. I'm looking at the lowest bearish fair value gap here. We have our market structure shift, a textbook inversion fair value gap setup after sweeping the low of the day, Asia session sell side, bouncing off the consequent encouragement of the new week opening gap. Those are just the two major confluences that I'm looking for. Plus, we are above the midnight level. So let's see if we get a retest of the inversion fair value gap. We've got that right here. Let's see what happens. We're holding the 50% of that inversion fair value gap. I'm always looking at that 50% level of each fair value gap. What would we target? Low-hanging fruit target right here. Stop loss. Well, we would have to give it a little bit of room, so let's put it below the 50% of this new week opening gap and right here at the lowest close. Just looking for the nearest buy side liquidity here. We still have the VWAP that we have to push through, but now I think we would have cleared the objective. We continued lower. We hit the low of the day. We had one losing trade, one winning trade. Now we use that inversion fair value gap and see if we can push back above the VWAP. We close right on the VWAP, so that's already a very strong sign. We open up with a nice volume imbalance, immediately push above this buy side, and that's really all the confirmation you need. We don't even care to fill in this volume imbalance with a wick to retest the previous candle's closing price. We immediately push up higher into buy side, and from here on, we really started to expand. But that's already way past my timing window. I'm not looking to catch these monster swings. That's not my trading style. I'm content with enough. I can use fair value gaps as my edge, paired with common sense and price action. And that's how I make my money. So just looking at this using one mini contract, of course, that's $1,100 if we round it up. We also have to keep in mind that after the New York Open, I would have very likely got in long right here. So if I would have taken a long right here with one mini contract and my stop just below this low right here, that would have been 250, 12.5, 370 or 361.5 or whatever, doesn't matter, of a loss. So roughly that would have netted a $800 profiting session just here. If we would have kept going even past 11:30, you also have to keep in mind 9:30, 10:30, 11:30. So at that point in time, you already spent two total hours in front of the charts. You've already taken maybe one, maybe even more trades actually. And emotionally, yeah, especially if those trades were losing trades, you're not in the right state, at least from my point of view. I'm just talking about myself here, to keep on trading past the 2 hour timing window. So I very likely wouldn't have taken that long unless I end the stream usually at 11 a.m. or if I hang around for a little bit longer and I really think that we could see a bounce here, I usually hang around for a little bit longer, 11:30. And then I maybe would have taken that trade. But you also have to keep in mind, we've already taken this London session short for a nice 2-to-1 or 1.5 risk to reward ratio here back to the VWAP. Nice scalps, being content with enough, just looking for the highest probability moves. Okay, from where can we take an entry and where's a high probability exit? I'm not looking to take my entry here based on a 5-minute time frame, looking for my targets all the way down here, just because we have the previous week's low sitting there. Doesn't always run, but doesn't always run this far, but very certainly it runs this far back to the VWAP. That's high probability. That's low probability. You catch trades like these during the London session especially, maybe once every fortnight or once every month or quarter even. And that's not what I'm here to do. I'm here to trade daily, looking for those high probability scalps from a very precise entry to a good target, and that's it. So that's the entire recap of Monday, and this already took much longer than I expected, gotta be honest. So I won't be continuing with Tuesday, Wednesday, Thursday, and Friday. If you're interested to see my analysis style in a live stream, make sure to click the link in the video description box below. That leads you to my Discord server, and from there you can sit in with me and watch me tape read and trade live with the executions on screen. You can ask me questions because we're actually not too many people in there, so there's not hundreds of people watching the stream asking questions with a spammy chat. Not at all. We usually have 5 to 10 people watching the stream, very good traders actually, and yeah, where we like to discuss and trade together essentially. So it's a one-to-one mentorship if you think about it. So make sure to check out the links in the description box below. Until next week, guys, I'm going to be back on Monday for the London tape read and the New York opening live stream. Until then, enjoy your weekend. See you later.